Good morning, Paul Georgie from Allendale. It's April 16th, and it's Monday morning. Grain markets and commodity markets in general are lower pretty much across the board. The grains, however, I think are being affected by the rain that we've seen over the weekend. We've had good coverage through most or almost 100% of the corn belt here over the last weekend. We've got several days of drying, and then we've got another system moving through late this weekend. So looks like pretty ideal conditions there. We've got also USDA report out this afternoon. The crop conditions and the planting progress will be out here at 3 o'clock. I expect for some considerably larger numbers than previous seen in the corn planting, and wheat conditions should have improved as well as we look at the numbers here today. So that will continue to weigh on things. We also got outside markets that are creating some pressure here for commodity prices this morning. China did relax control of its yuan versus the dollar to 1% change from the price fixing on a daily basis, so that could have an impact. We've also got the IMF and the World Bank meeting in Chicago this week, dealing with the global financial problems. There's also more concern coming out of the EU with Spain running into some higher cost of money that they've got to pay, and that's creating some shakiness in investors' minds should they continue to be invested in commodities. And I think the commodity numbers that we're seeing coming out of the CFTC Commitment of Traders report on Friday showed that commodity investors have decreased positions by about 9.3% last week, which is a very sizable number. Corn made up part of that. Corn was down. It showed that they reduced their long positions and overall positions by about 4%. Wheat, they increased short positions by 33%, up to almost 42,000 contracts. But soybeans was the favored child. They increased positions there by 3% last week to a new record long position by funds in the soybean complex. So they're still bullish on beans and concerned about values in these other commodities. And I think with the rain, the fund liquidation is the reason we're seeing some pressure here overnight, and why we should see some weakness here this morning. We still have to monitor headlines. We'll need to monitor the headlines on export business. That will be looked at and watched very closely here at 8 o'clock this morning. And then we'll need to see what's going on in Europe as that situation develops here over the week. In the livestock trade, volatility is the word that describes it. We've had cattle futures under pressure on Friday. Thursday we had sharply higher values. And will the same reverse thing happen today in the pork complex? We've seen hog prices, nearby hog prices, down $3 on Friday, and markets will not open until 9:05 this morning. You have to expect that we would open lower near the May of 2011 lows at around 89.70. That's a key number there. If we break through that, we'll probably hit some more sell stops as the market takes out these major short points. But cutout values were stronger in beef on Friday, $1.70 higher in choice, 71 cents higher, or 57 cents higher in select. Pork cutout values were down 171 on Friday, and a lot of the pork complex is getting its weakness off of the news from China that their hog industry has increased production. And that would suggest that they will not be buying much pork from us as the economy slows and their production increases. So those are things that we're monitoring very closely here today. Reasons to stay in touch with Allendale's research. We'll be happy to answer any questions that you might have. Also a reminder, we've got a few days left on the special planting program that we had for the Allendale Research Center, 6 months for only $99. Call us or sign up on the web for that. And we wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.